Commodity TV, ladies and gentlemen, the third day here at PDAC in Toronto. It's the most important commodity fair in the world, and I have the pleasure and honor to talk to Scott Melbye, a real legend here in the uranium space, and he's the Executive Vice President of Uranium Energy. And yeah, let's talk about some things. Thank you very much for your time.
It's a pleasure to be with you.
So as I said, you are a legend. So you have such much experience in the uranium sector. Please give us an overview about the uranium sector nowadays.
Yeah, listen, I have the benefit of being really blessed to be in the uranium and nuclear energy industry for 42 years. So I've seen all the cycles, all the ups and downs, everything in between. And I can say without a doubt that the fundamentals behind the uranium investment thesis today, I've never seen a better combination of megatrend of developed world needing massive amounts of energy just to power society, let alone data centers and AI. The geopolitics that China and Russia really squeezing the amount of supplies that we're going to see to the West and competing for resources around the world. And that supply-demand deficit. We basically have a 50 million pound deficit between what the world consumes annually and what it produces. That goes to 1.75 billion by 2045. And Goldman Sachs this week indicated they think it's closer to 1.9 billion.
Okay.
So the need for new mines in the United States, Canada, Australia, Africa, has never been more urgent. I think in UEC's case, we have the added benefit of a very supportive government in the Trump administration.
Yeah.
There's not a department within the U.S. government today, whether it's Department of War, Commerce, State, Energy, that isn't involved in critical minerals, and uranium falls on that critical minerals list. So we're feeling the love, feeling the need for our uranium production in Wyoming and Texas to ramp up as quickly as possible.
Perfect. How's the situation nowadays between spot price and long-term contracting?
Yeah, I think we're going to see in 2026, we're already beginning to see a phenomenon where utilities are returning to the long-term market. They've been below replacement levels for a long time, but as they're going back to the long-term market, they're seeing evidence of this deficit in the form of fewer offers, fewer material being offered. Quality suppliers like Cameco are probably sold out through 2030 and beyond. And so they're really forced to either accept higher prices or supply from producers that are more speculative. If they don't like that, they only have one other option, and that's to fall on the spot market.
Yeah.
And the spot market is too thin to handle that kind of demand. So we now have a situation where long-term and spot are playing off each other to the upside. So expect, long-term prices are pushing in the 90s, but I see spot long-term prices over $100 a pound here quite soon, and that will really give a boost to the sector.
100%. That sounds like a perfect investment opportunity and environment.
Yeah.
And as we can see here, so America's largest and fastest growing uranium company.
Yeah.
So please give us an overview about your projects nowadays in Wyoming and Texas. What's going on there?
Yeah, so those of you that are familiar with UEC, we've been one of the fastest growing companies with $1 billion invested in our uranium assets in Canada and the United States. We've kind of moved from an acquisitive stage and a development stage to very much operations and production now. So we're in production at Christensen Ranch, Irigaray. We are imminently starting up the Burke Hollow project in South Texas. And then we have a third hub and spoke of production in the Great Divide Basin of Wyoming, which is on President Trump's Fast 41 permitting timeline, which is meant to speed critical mineral development into production with a real focused regulatory effort. We have 12 million pounds of licensed capacity of those three facilities, and we have 300 million pounds of mostly licensed resources within 50 to 100 miles of those three facilities. So we not only have the largest resource base in the United States and probably second to Cameco in North America, but we also have an ability to take pounds in the ground and put them into pounds in the drum, which is what the market needs now. We need production We need it now, and not just the utilities. We're also seeing the U.S. government beginning to, I think, will go back to the strategic uranium reserve, which was a feature of Trump's first term. Stockpiling of critical minerals, Project Vault, are all things this administration believes strongly in. And I think, we should have an ability to be able to sell some of this Wyoming and Texas production to the U.S. government, which ultimately could support things like the naval propulsion program with our aircraft carriers and submarines, something that that demand is now materializing again.
Sure. So you have production-ready assets,
Yeah.
but you also do have uranium in stock.
Yeah.
So how does this dual plays out?
Yeah, it's between Uranium Royalty Corp and Uranium Energy Corp, two kind of sister companies, we acquired almost 10 million pounds off the bottom of the market in the last 6 years. We've sold maybe 6 or 7 million pounds of that. In UEC's case, that's the source of cash that funded the acquisition of Sweetwater and Rough Rider from Rio Tinto. And we still have 1.4 million pounds. And so we can supplement our production sales with inventory sales. And remember, all of our sales are going to be at unhedged, uncapped, at spot indexing. So if you're a believer in $100, $150 uranium, you're not invested in a company that signed contracts 5 years ago that give you $65 a pound in a $100 market. So really look to our average selling price, prices that we'll be reporting in our quarterly filings, and I think you're going to be very happy.
Nice. I'm always asking me the question from an operational standpoint, what differentiates UEC ISR platform compares to your peers?
Yeah, listen, we love ISR for nothing more than it allows this technology, this non-intrusive way to mine uranium and sandstone ore bodies, allows us to compete on a cost per pound basis with some of the largest producers in the world. We're seeing our initial production come in under $40 a pound, all in sustaining cost. That puts us on par with some of the biggest mines in Canada, and probably competitive with Kazakhstan. It's just not capital intensive. We're building mines in 2 states concurrently, and we're spending $50 to $60 million because we have the advantage of existing infrastructure. We're only building satellites and well fields incrementally. But it's much like oil and gas development. While we're producing from the well fields in this area, we've got to keep building out and drilling well fields to stay ahead of the depletion curve to drive those production levels up.
Okay. All that needs money. How's the cash situation in the bank?
Close to $700 million in liquidity. So we're very well cashed up for that. Of course, we announced in fall of last year that we're moving downstream into uranium refining and conversion. That will be, certainly be a heavy lift, but we're engaged fully with the state and federal government on what sort of support could be forthcoming in such a critical uranium fuel cycle infrastructure in the United States. We're engaged in a full siting initiative where we're looking at several sites in multiple states, and we're continuing to advance the Fluor definitive feasibility study, and finally hiring and staffing up with people that can build and operate a UF6 conversion facility.
Nice. So last question, looking ahead 6 to 12 months, where do you see the next catalysts for UEC?
It's all about production. Okay. We've got, I think we're building header houses and well fields so quickly now that we're actually bumping up against the regulator's ability to sign off on the final. These aren't approval or permits or license. They're just the routine kind of process of submitting well field data before we can turn on. So we're excited to push them along in Texas and Wyoming to work a little faster because we get those permits in. We've got fresh well fields, header houses in both Wyoming and Texas to come on and see that production ramp up over the remaining course of this year.
Amazing. I'm looking forward to it. I'm a happy investor in UEC. So thanks for all your work and keep going, please, Scott.
Absolutely. Thank you.
Thank you very much. Yeah, ladies and gentlemen, that was Scott Melbye, the Executive Vice President of Uranium Energy Corp. And you heard it. Lots of improvements, lots coming in the news releases coming soon. So check out the company, and bye-bye here from Toronto.